fine.
Indeed. So I'm just gonna go ahead anyway. Ever since the Zoom update, it's been a really pain with using Zoom because this password stuff is just really annoying. So, but it's all good. So we have seasonalities for these assets so far. So about 13 assets, and I must actually say because Jordan is that a Jordan or Kotlin? One of them requested for Nesto, Microsoft, and Prime America, and I don't really know what company this is, but we still got the seasonality anyway. But basically, what happens is that every asset, like every stock asset, actually functions like the forex market. Now, I don't know who's been trading forex recently. I personally have. I only trade maybe very few, not every time. I just trade maybe once in a week if I have the opportunity to. But I'm trying to practice with the stock market since we're moving into this new dimension. And what I've noticed is price actually tends to respect the stocks more. So let me just see if I can get. We can just go through Nesto. Let me see if I have Nesto right here. Have you actually practiced on any stock market at all?
Yes, I did Tesla.
Tesla. Okay. Actually, let's even check on Tesla in the meantime. So let's check Tesla. This 5 minute chart. I don't need that. And yeah, I noticed that Will actually does work for the stocks. So it's a way to filter it. So Tesla went down for a little while. I think I profited off this move right here. Can't remember. I profited a bit out of this.
Oh, we can see.
Oh, my bad. It's this screen share. So I like Tesla. I think I profited off this down move because I came out. I came out of Tesla a while ago. But what's happening? What's happened is welcome, Abel. What's happened is basically I want to trade a lot more with the stocks. So let's look at Microsoft. And I was gonna look at I think something else before. So if we go on stock seasonality, I don't know if you guys have access to this. Um, I need to even check who has access and who doesn't. I'll check that in a while now. So let's just run through Microsoft, for example, now. So this is the Microsoft. We have 33 years, 15 years, and 5 years in terms of how it moves and seasonality. And what I can see is this doesn't really give me a very good time to trade at the start of the year. But around here, for example, 14th, we got that up move. And let's see if it actually happened here because um, 14th of 04. Yeah, it did kind of sort of happen. When is it gonna end? She ended at 27th. So if we had bought on the 14th, because the way you hold stock is different from forex. So on the 14th right here. So let's say we open the market right here, bought here. So about the 27th, 27 right here. At the start of 27, you probably have profited 77 pips. Now, this isn't much in terms of how you trade it, but in stocks, what matters the most is volume. So in terms of stocks like Microsoft, for example, this is not very predictable. I mean, quite looking at this, I wouldn't even trade Microsoft until probably around here, around October. October will be the best time to trade it for me towards the end of the year and buy that. So from January, I'm just going to ignore that. And if we look at it, for example, let's say October, we're looking at it October 18th, for example. And if we go to right here, October 18th, 17, 18 right here. If we had bought, we'll be in good profit. So if we bought on the 18th, somewhere in the 18th, it's only pulled back around 21 pips. But if you bought that up onto, let's say, 15th of December or maybe 27th of December, let's see how that goes. So 15th of December should be right here, or 27th if you were braver. It's not even that much difference. So from here to here, you'll have profit about 216 pips or so. About 216 pips, and if you enter there, about 196 pips. So it is good, but in this case, I don't know, depending on the broker you're using, or if you're using a proper stockbroker, then the lot size you enter will be different. So if you're going with uh, in the broker that I'm using, they're using 10 lots, and I'm not using FX Pro to trade, by the way. They're using 10 lots, and some broker use one lot to trade these assets. But what I notice is this, right? During the weekend, because this is still a new strategy. What I noticed is this: you can see the William started to move up and only take the trade in towards the direction you're willing to go. So if, for example, now if the seasonal shows your up direction, which you already know in the forex, your will has to be kind of bumping towards the upside at least. You know what I'm saying? To trade it. As you can see, with a massive dip that happened right here, you can see the dip that followed, and then this up move came. You had a small up move, then this dip, then a dip came, a small up move. This really didn't happen. That didn't happen, but this happened. This move right here happened. So if you follow it with the seasonality, you have a better chance of winning your trades. So now let's look at another example. You just look at let's say, for example, let's look at Netflix. I was gonna go check that because I knew someone requested that. Welcome, guys. Um, apologies for the password that Zoom is requesting for. I really do not understand how to work my way around it. So, yes, so let's look at Nesto, for example, and maybe we'll look at Netflix. I don't know if we looked at Netflix last week, but let me see if we have Nesto right here. I might have to open my second. Nope, 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 nope. So these guys don't have Nesto, but if you trade that, for example, you should have that. So I can't look at Nesto. Let's look at Netflix instead. I think we have Netflix right here. So this is Netflix, and basically what we're seeing is we had 17th or 5th. So we getting close to around this time of the year. So 19th, for example, which is if I'm not mistaken, should be Tuesday. So on Tuesday we should be expecting Netflix to be rallying up until, if we get it right, up until the 7th, which is July 10th. So Netflix, for example, I mean, during summer, people that want to have their summer holiday. So far, what we can see during this quarantine period is, Netflix has been going up, and it's just broken out to the upside. So if we look here, just broken away from the previous high, which it was, and this is the highest Netflix has ever been over time. And what this is predicting based on seasonality is that Netflix is going to keep going up until around July the 10th. So what could happen? We have two things to happen. Like Williams is already giving up a slight curve. Now I don't really personally like the way this curve looked. I would have loved something like this to have happened, but since it didn't happen, and since the strategy is still new, we can expect from Netflix is probably dipping a little bit. We expect it to dip a little bit, and then we expect it to move slightly higher like that. So let's say come Monday, the market might gap, it might not gap, but we expect a retest towards the breakout zone and then go higher. And if we get this right, we might be profiting anywhere upwards 300-400 pips on this trade. So if anything at all, if you want to trade next week, this would be an asset to trade. Now, for the guys that have the William, that have the PZ entry, what I would suggest, or what I would recommend, is this: always look for your entry with the PZ. Never, ever, ever go into an entry without your PZ being in play. Now, it's much safer. Let's say we're going to buy, for example, which during this quarantine, what you're looking to do most of the time is just buy Netflix, and sell almost every other thing, airline stocks and everything. What we should be looking at is this. Like, once this gives you an entry right here, your stop loss should be right here. I've said this so many times. And in this situation, it's 75 pips. But if you're trading options, for example, and not trading, you're not trading, you're not trading like Forex, your stop loss, your exposure is lower, slightly lower. So your stop loss can be here. And if you had entered around here, for example, market will have pulled back around you about 25 pips or 26 pips, and you will be in profit all the way to about 201 pips. So your second entry could have been right here, your third entry could have been right here. Or you could have just waited for price to properly move away and then retest the zone it left right here and then move. So in this scenario, for example, come on the 19th, what I would expect price to do is price to dip. Once price dips, ideally I want it to dip somewhere around this red line, but right here also shows me a good support level. Now, I do not normally analyze on 5-minute chart. I'm just looking at this, but we go to 4 hours. Yeah, so if we go into 4 hours chart, for example, what I would want is price retesting this moving average. You guys have yours as 20 moving average. I just have mine at 18. I'm testing out new ones. So, but your 20 moving average, you want price to come very close to your 20 moving average and then take that trade towards the upside. And by taking that, you can actually hold it from right now, which is the 17, 18, 19. So around here, around the 19th, for example, you can hold that trade up onto the 10th of July. Is that simple enough, or would you like me to re-explain that for Netflix?
That's good enough. But where will the stop loss be?
Your stop loss. Okay. Now that's a very good question. Now, basically, because we're looking at it on the 4-hour chart, right? If price comes on, let's say on Tuesday, and price tested your 20 moving average around here, your stop loss should be below here because this was the last raid point, right? So your stop loss would be quite massive, about 117 pips. But I wouldn't want to. I mean, a lot of you don't have that kind of account to hold that. So what I'll look for is I'll quickly look for support and resistance level, which should be around that section. So if price, for example, comes around here, I would say go in with your PZ. So 15 minutes or 5 minutes, depending on you. 15 minutes is much safer. Now, if price tested here, for example, this zone, let me just mark it right here. Price came somewhere around here. So I'm gonna highlight this entire section. And I'm gonna go to 15 minutes for a second. So if price came around here, this zone right here, your support zone, and between your 20 moving average, once price enters this zone, remember, you do not go in, you wait. What you wait for is two things. There's two things to wait for. Price, the William actually giving you up move is about to occur, and then you get your PZ buy or any indicators that gives you your buy or sell entry. Then once that happens, whatever candle the indicator gives you your buy, your stop loss should be below the zone. So in this segment, for example, in our case, we have the PZ right here. Your stop loss should be right here, somewhere below right here. Now, if we measure that from here, that's about 93 pips, and that's still wide. Now, I understand this is very painful in the sense that your account might not be able to hold that much if your account is small. What you can do is lower your time frame to about 5 minutes. Now, with 5 minutes come a bigger risk, but your stop loss is much smaller. So let's say, for example, price came into the zone, and watch what happens. Once price came into the zone, in most cases, price will leave you for a little while before it comes back, maybe wants to raid you. So let's say as price came down here, you got your first entry right here. Your stop loss would be right here, just right below here, which should be about 77 pips. Now, with a 77 pip stop loss, that's a lot. But what you can do, based on what you know before, your support and resistance, you know price is most likely going to retest. If price ever comes down, it's going to most likely retest either the tip of the previous candle right here or the body of the candle. So it's either retest, the rules are always the same. It's either retest the tip right here or the body. So what you can do is to minimize your stop loss. If PZ gives you an entry right here, your stop loss should be somewhere around here, just in the middle of this last candles right here, these two candles right here. In that case, your stop loss is now 52 pips. Now, because whatever you're going to profit in this asset is going to be very wide anyway, you're holding out to July and we're in May right now, so you have a whole month plus to hold. If I'm not mistaken, almost 2 months to hold this trade. You shouldn't be worried about risking 55 pips, 60 pips to profit about 500 pips. That's a very small risk to reward ratio. So if, let's say, you get that entry, you put your stop loss around here, you're safe. Now, if you get this entry, for example, and you put your stop loss below here, you're almost safe. Price could come and almost raid you. I mean, in this situation, don't put it like at the edge of the candle right here. Make sure you put it somewhere below it. In this scenario, for example, price might have raided you, might have not, but I wouldn't put it too tight. I'll put it like somewhere around here, maybe 10, 15 pips away from that place. And what will happen is price almost retesting you and price moves away. Now, the trick is this. Once price moves away like this from you, lock in your profit. Do not risk it. Lock in your profit. If it's 10 pips you're locking in, lock that 10 pips in. The main reason is, even if you're locking in 10 pips, if price comes back and raid you, for example, like right here, you won't have lost anything. You will have still pocket your 10 pips and you can look for another entry in which you can enter again right here. Put your stop loss right here, enter again right here, risking 42 pips, but the reward is higher. Stop loss right here, risking 42 pips. Now, you're not really risking 42 pips because in this zone, let's say you've locked your profit in at 10 pips or 20 pips, let's say 10 pips minimum, for example, you're only risking about 32 pips in this scenario because you still have that 10 pips in the bank, right? And once price moves away from this entire zone, you don't want it to move just a little bit, moves properly away, you can then relock your stuff in profit, about another 10 pips in profit. So around somewhere around here. And this time around, price has left your zone. So you now have the 10 pips from the first one banked, plus whatever pips you get from this move that's going higher. But your stop loss always remain below the line. And do not go into your trade unless you get a signal or you're in between the buy zone. Is that fair enough? Or should I re-explain?
No, that's perfect.
Okay. Is there any more questions pertaining Netflix, for example? Anyone have any questions? Please feel free to ask any questions. It doesn't matter whatever questions you're asking, to be honest. And keep in mind, because this time around we do not have the probability tools yet for Netflix or any other asset. We only have the seasonal for a few of them, and we do not have a COT in this scenario. So there's only 2 criteria or 3 criteria you have to meet. The seasonal has to align, your William has to be in line to an extent, and you have to wait for a signal from your PZ or any other entry indicator you're using. Okay, so if you guys have any questions pertaining to, if you don't have, for example, the PZ entry indicator or whatever indicators to use, please let me know. Okay.
Wait, so for the indicators, should we do it like on the 4-hour time frame, like the PZ day trader?
No, not 4 hours time frame. 4 hours time frame will expose you massively in terms of stop loss. So, for example, if you went in on this 4-hour candle, for example, right here, your stop loss, if you're putting below, it will be 270 pips. And let's say if it was in this scenario, for example, your stop loss would be 171 pips. You understand? So to avoid that, what you need first is a zone. So the first thing I paid attention to was my moving average. You see, to some extent, price seems to respect it. Price left, bounce on it, pierced it a little bit, came back up, bounce on it again, came back, bounce, couldn't break till it broke right here. And then price came back, bounced on it. I'm expecting price to come back and bounce on it one more time. Now, that's rule 1. So this would be my first line. So that's why I had this first line here. And the second one is where is most likely support. right here. And now you guys have the tool. You have your PZ support and resistance tool, which should give you where your support should be. I just did a manual one and I chose here, for example. But if we load the PZ support and resistance, it could give me totally somewhere different. So actually not even that different. So it gave me somewhere around here, for example. So in this scenario, what I would do is this, right? So this is mine is the red one, the PZ one is this. So between the 20 moving average and this support line is where my entry should be. It's about 135 pips wide. Now, what I'll wait for is I'll either go to 15 minutes if I know I can have an account that can actually hold that much, or that could hold a very wide stop loss, or I go to the 5 minutes. Now, with 5 minutes, you have a greater risk. But with the 5 minutes, the trick is always lock yourself in profit. The moment you move about 20, 30 pips in profit, be locked in. Just sit tight and hold on to that position so you don't lose. But if you're more patient and you have a bigger size account, just a little bit big, you can absorb the 15 minutes stop loss. So in which case, when price comes into that zone that you've already drawn out, which is my 2 red lines, I just use the yellow to depict further. Only when I receive my first signal am I going in. So price has to come in that zone and then give me a buy signal. Then I take the buy. And once I'm in profit, I lock myself in. So for example, in this scenario, if I had bought right here, price not too long, started moving in my direction. It's moved 100 pips in my direction. And by looking at the PZ line already by itself right here, you can see that most likely there's a resistance level right here. So you can take off some of the profit. You can take out 50 pips out of your profit right here. Let's say you enter from here, take out 50 pips, and then lock the rest in profit. Lock another 10 pips in profit. You understand? In which if price comes back and raid you, you have the 50 pips in the bank plus the other 10 pips you have, which is 40 pips. Okay? So if price raids you, you're already in profit about 60 pips. Now, when price tends to come into the zone, you be patient again to get your next signal, in which this is your next signal. Now, at your next signal, you have your 60 pips banked already. And if price tends to pull against you with your 60 pips that you have, you're still locked in profit. You're still making some money. You won't put your stop loss at 60 pips. Maybe you risk about 40 out of that 60, still have 20 pips in profit. Now, if everything goes in your scenario, you have 60 pips plus whatever you profit, which if you let price comes back here, when you profit about 69, 70 pips, you can take 30 pips off the table, lock 10 pips in, and leave the rest. So adding that 30 to that 60, you already have that's 90 plus that 10, that's 100 pips already collected, 10 that you already locked in if anything goes wrong. In which case, when price start moving towards your direction, you've already profited about 30 pips plus 10 pips in there, and then whatever is left is for you to take. Have I confused anyone?
No, that makes sense. That cleared it up.
Okay. Please, I know it's different. Basically, what happens is that we speak about this now, but when you're in the game, when you're playing it, it's different. You won't be able to compute it all at the same time because your emotions is now tied to your money. Now, what I would recommend everyone do is this. First things first, be patient. Let price come into your zone first, and then only then should you act. So let's say, for example, I'll give you an example that failed right here. When price came in here, for example, oh, look at a perfect example. We had a line right here. Price was right here, and it gave an entry right here. Would you have gone in? Would anyone has gone in right here? Be honest with yourself. Price didn't quite get into your zone, but was just around touching your zone. Would you have gone in?
Yeah, maybe if the PZ came up.
If the PZ came up, right? Let's be honest.
Yeah.
With yourself, man. You like gone in, right?
I would have if the PC came up.
I would have gone in myself. But guess what? If we had all gone in, we would have lost whatever pips we would put our stop loss at. So that already has given you tension. The moment you lose that pips, you're already on the tension, right? You want to make that money back. But by wanting to make that money back, you might end up now risking more than you should risk normally, in which then the market can then go against you. Now, the trick remains, regardless of whatever happens, stick to the rules. If you draw a line and draw a zone out there, if price remains 1 pip to get into that zone and price doesn't get there and leave that zone, let that trade go. until price comes back to that zone. I mean, those are the mistakes I've made in the past, and sometimes I still make them now. So in this scenario, for example, let me break this one to you. So let's say we took this one, we lost. Now in this scenario, you might want to risk 2 times more. Nah, that's the wrong move. Risk exactly with your money management. Whatever you have planned with your money management, risk exactly the same thing. Don't go beyond that. Now in this scenario, once price gets here, whatever you lost here, take it off the table. Balance the scale. You know, once price breaks out anyway, price comes back to retest. So in this scenario, you'll have made about 55 pips, let's say, for example. If you'd lost 30 pips right here or 40 pips, take that 40 pips off the table and be okay with the 15 pips profit you made. Now, with that 15 pips, even if you locked yourself into break even, once price comes back and rate that position, you're still break even. You haven't lost anything. Then you can start making profit off this trade and off this trade. But the rules still remain. Let price comes into your zone first, dip into your zone, and then start leaving your zone. Only then should you take the trade. Don't break the rules for anything. So scenarios are right here. When price enters the zone and leaves the zone, that's when you take your trade. At this point, price came back 26 pips. And at this point, you're already locked in. You already profit about 50 something pips, 53 pips. So you should be locked in anyways. In break-even scenario right here. If you had lost that trade, if price comes back against you, you'll have made 10 pips. In which then, if you go in again right here, you know, price gone 50 some pips again, let's say 64 pips, lock yourself in 10 pips, you've made 20 pips. And then if you come in right here, which you didn't wait for price to dip, you can see whenever price dips inside, price tends to move in a significant manner to lock you in. But when price didn't get inside this time around, price only moved 0 pips. It didn't even move at all and came down. So make sure your criteria is a check. Price, first of all, your seasonality is pointing in that direction. Second of all, your William is pointing in that direction. Third of all, price has come into your zone. You've analyzed the support and resistance zone with your EMA lines as well, plus your support and resistance indicator. Then price leaving that zone. Price must enter. The condition is price must enter that zone and leave that zone. Once price enters and leave that zone, that's when you take a trade. If price almost gets in that zone, like right here, but didn't leave, just start leaving, don't go in. No matter how sweet that trade is, even if it end up going into profit, you don't have anything to regret because you still have your seasonality tools showing you where else to trade, when next to trade. And if you look right here, you can't find a stock to trade, just shift your gear and go into the seasonal for Forex. Leave the stock, go into Forex, look for something else in Forex. Now you have the seasonality for Forex and you also have the seasonality for stock market. So you have both. You have so many more trades to trade. I mean, with the Forex, you have about, if I'm not mistaken, 32, 33 pairs. Plus this, how many do we have? 13 right here. You're having more. And I assure you, as we go along, we're still going to have a lot more seasonality coming into the game. So it's not a game of how to rush to make quick money, but it's about how sustainable you can make your money. So it's to make your money dance for you and make that money make more money for you. And also, I saw, Abel, you had a question. You said, Stu, would you love to? No, usually for confirmation and settings. Which Williams are you talking about? Are you this one, right? So, okay. So this Williams, the setting is the same. It's exactly the same as the default settings, which we got it into from the website. So if you're a member, you can download it from the indicator section. It's exactly the same settings. I don't need to change anything. The rule is this: if you want to buy, you want price to be pushing up. And if you want to sell, you want price to be pushing down. So basically, if you're looking to buy, for example, the William must be showing as if it's going up. And then if you want to sell, Williams must be showing as if it's coming down. And that's basically the rule. That's the rule to the game. So that's basically it. So William must be pointing up for buy. William must be pointing down for sell. And that's what it is, because William is kind of good in the sense that it gives you a kind of like a heads up that price is about to move in your direction. And that's it. So that's basically it. Is there any further questions in terms of Williams or entry? No?
It all makes sense. It looks good.
Okay, fair enough. So basically, this week, what we're looking to do is Netflix. Now, in this situation, what we have on Netflix is we do not have that up push from Williams, as you can see right here. But the entries on Tuesday, so we keep a little bit of faith. On Monday, probably we can see a little bit up move towards that side, and then if we can get a little bit of up move on the William, then it will be very ideal to go in. But um, to be safe, I would wait for price to pull back into somewhere around these zones right here, because price just broke out fresh. Price has never been this high before. So 455, 54, that's the highest it's been. And then just wait for price to retest and then go. And one more thing, you should use your ATR on 14. So this is another one that you can tend to use when you want to actually trade. When you want to trade this asset. So if you don't know where to put your stop loss and you're a bit confused, maybe if you're using a lower time frame, for example, about a 15 minutes time frame, and you don't want to risk too much and you don't know exactly where to put your stop loss, I'll recommend using your ATR. In this situation, it's about 23 pips that's giving you. You have to know how to read this stuff because it's slightly different, So I'm going to go for around 23 pips right here, which is around, so if you're going in somewhere around here, your stop loss will be about 23 pips. So somewhere around here. But obviously, you don't want to go in around the top. You don't want to go in before the breakout happens. You want to go in on the retest. Maybe price comes back and then, retest the 20 moving average, and then your stop loss will be about 23 pips below it right here. So you're risking that very small amount, for that move. And the lower you go on your time frame, the lower your ATR becomes, but the less accurate it also becomes. You understand? So that's another thing to keep in mind. If you don't know how to position your stop loss, or you don't have your PZ tools, you should use your ATR. And for the guys that have access to the website, don't forget, everything here is here to help you. Everything I've actually put on the website is there for assisting you. Don't forget, use this tool. There's this tool that I've given right here. I mean, it's very powerful. A lot of people don't have this. And this tool right here, your expert advice, or your auto SLTPTS, use this stuff. Use this stuff. It's one of the stuff that I found online that's very good. Use it. You understand? It's something you want to use. Don't ignore it. So it sets your stop loss for you automatically, set your trading stop for you automatically, and your take profit based on whatever figure you set for it. It sets it automatically for you. So that way, you know that the only thing you want to bother yourself about is your entry. Once you get your entry, it does the rest for you. You can walk away. You understand? And that's basically it. Make sure you use it. It's actually a very high recommendation. It's requirement in trading. You should use it. Okay. Is there any question?
It's pretty good.
Okay.
Check it out.
Yeah. So if anything, Netflix is one of the stocks being looked at this week. I haven't looked at any forex pairs so far. I'm gonna check those in a moment. But I think we traded euro last week for a very short time because I've already had a position I've been holding for a very, very long time on it, and it's been a massive profit for a very long time. I think about over a month I've been holding that position now. So I saw another opportunity last week. I got rated on my first entry. On the second one, I was able to make some profit. I had some entries lower, and funny enough, where I put my entries lower, I must have got really, really unburdened, and I just went in, and that actually beat me a little bit. But I was able to still come out overall in profit. I was kicked out in profit from the trade, so regardless, it's still profitable. So the forex is still slightly unstable, and you have to be very careful. But still, if you follow the rules, you still stand a good chance of actually winning. So hence why I would say if you see a very good criteria on forex and everything matches correctly, the probabilities, the seasonal, the COT, the Williams, and everything matches up, take that trade. But keep in mind, market is unstable, so you take that trade, lock yourself in, and let's see a good result. And if you don't find any opportunities in forex asset, just come to the stocks, man. Just play with the stocks. It's slightly more stable than the forex at the moment, and we're gonna get that. And one more thing we're still waiting for is when the lockdown goes down and everything is over, the airline stocks. That's what we're going for. So that's actually what motivated me to start creating seasonality for all the stocks anyway in the first place. So the airline stocks are another one that we should all, participate in. Members or non-members, everybody should make some money out of that when that time comes. We all deserve it. Okay? And is there one more question? We can take one more question. That's it.
Thanks a lot, bro.
All right, so that's it for today's webinar, guys. So we're looking at Netflix for this week. It's at the all-time high, and we're looking for a little bit of retracement and then buying it back up again. So on Tuesday will be the most ideal day, and we'll take it from there, okay? Thank you guys for attending, and I'll catch you guys in the chat room. And also, if you have any questions, just send it over. I'll be willing to answer you. And catch you guys next week. Thank you. God bless you guys.
Appreciate it.
Take care.
You too. Thank you, Tim.
All right.